Joining me now is Mark Mobius, founding partner at Mobius Capital Partners. Mark, it's good to see you again. Welcome back.
Thank you. Good to be back.
What do you glean? And we should mention, by the way, this isn't just a one-off by Buffett. He's going to be on Squawk Box from Japan tomorrow morning. This is a big play for him. Why do you think that is?
Well, if you look at the numbers, the PE ratios of these Japanese trading companies are low. They're single digits. So that's number one attractive. Number two, they do pay dividends, 2-3% dividend yields. But as I've been looking at these charts, wow, these are up since 2000 about 100+%. So it looks like, he's buying at the top. But I think he's got a bigger fish to fry. I think he's got plans for something else. And he's already mentioned that he's planning some big deal, which may need the help of these Japanese trading companies. So I think that's another complex aspect to look at. Also, he's floating yen bonds for Berkshire Hathaway, which is another factor which may impact what he's doing on the stock market. So it's a number of things happening here, but I frankly would not be involved in buying these companies. The return on capital is not high, but the P's are low, but the prices have just gone up too much, I believe.
Is it possible, though, that they make sense as a commodities play? If you were bullish, as we know he is, for instance, energy is one of the only places in the U.S. he's pretty active right now.
Yes, very good point. But remember, these companies are not only in commodities, they're a bunch of other things. They're all over the world in consumer products, in manufacturing, all kinds of things. So, yeah, there may be something to do with commodities, but it's probably some fraction of what they're actually doing in their businesses.
Sure. All right. So let me turn from Japan, which, as you said, is not part of your appetite. I know you're always looking at the emerging markets. A lot of people have been saying, hey, some of them have disappointed this year. Brazil's been a disappointment. I haven't kept track of the panoply of others in Southeast Asia where you're typically focused. But I do know overall, I think emerging markets have been trailing to some extent the U.S. market so far year to date.
Yeah, it has been trailing actually the last few years, but recently there have been periods when emerging markets have outperformed. And now you're probably going to see outperformance as a result of China. You must remember, when we look at emerging markets, we look at the index. And the MSCI Emerging Markets Index now moving ahead and is beginning to track the S&P, as you can see from this chart. And we believe that actually will outperform going forward. Mainly because of what's happening in China.
Explain that, because most people have concerns about what's happening in China. Granted, it's the only place where we see, M2 is actually expanding right now, but then their inflation data was kind of surprisingly soft, and that doesn't really point to an economy with a lot of pent-up demand.
Well, if you look at the Chinese statistics, you have to take them all with a grain of salt.
Sure.
Some of these are fixed according to the policy of the Communist Party. So you have to be careful on that front. But it's clear that the Chinese are determined to boost the economy. They're moving very, very aggressively to attract foreign investments. And the local market is beginning to do very well. And of course, the local investors are a big factor in that market as well. So putting that all together, I believe that China will do a lot better than many of these other markets. And that, as a result of it being 30% of the emerging markets index, will boost the emerging markets index and will attract a lot of attention on the part of investors.
Sure. Quick final question on Taiwan, where I know you're obviously enthusiastic about some of the investment and technology success they've had, but continues again to be overshadowed by China in this sense, perhaps in a negative fashion. What would you say to investors about both the opportunities and the risks there?
Well, there is a interplay between Taiwan and China and a tremendous amount of trade between these two areas. A lot of Taiwan companies are very successful in the consumer area, for example, in China. The biggest soft drinks manufacturers, the biggest instant noodle manufacturers are Taiwanese. And in the tech area, China has been very, very dependent upon Taiwan. So I don't think that's going to happen very soon in terms of a downturn in trade between these two countries. But of course, because of the U.S. sanctions, Taiwan will have to be very careful of what it ships and gives to China.
Right.
Nevertheless, I believe they're still going to do very well in this relationship.
Is it true that Taiwan is actually your biggest holding geographic, about 20% of the portfolio? And why is that? I mean, is that just the strength of the semiconductor names?
That's right, because we believe that these so-called fabless companies, companies that do the software for the fabs, for the large manufacturers like TSMC, are going to do very well going forward. They're very cheap now. They're growing at a tremendous rate, and they have tremendous potential going forward.